Page 3 now, the politics of the global economy. In Russia, the ruble is in a free fall. Its value against the dollar dropped 15% this week, and it has been cut in half overall this year. So now Russians are flocking to stores, frantically buying big-ticket items. They're trying to avoid the inevitable, skyrocketing prices. So the Russian government is bracing for a possible run on the banks. However, President Vladimir Putin is telling Russians to remain calm and that the ruble will bounce back.
The existing situation would last for about 2 years, but I believe that it is not a necessary scenario because the situation might improve earlier. It might begin improving in the first quarter, in the middle of the next year, or at the end of next year. No one could tell that for sure. A lot of factors of uncertainty exist there. As far as the central bank activities are concerned, well, I don't think I could call the situation the crisis, or you may call it whatever you want. But I believe that I said quite clearly that the central bank and the government on the whole are acting correctly and adequately.
Bottom line, Russia is looking at a recession, inflation, and a very rocky economy. So what role are U.S. sanctions against Russia playing in all this? Joining me now, president of Wilsey Asset Management and Daily Ledger contributor Brent Wilsey. Brent, okay, so the sanctions against Russia, are they suddenly having teeth in the Russian economy? Is it self-inflicted, or is it kind of a combination?
I wouldn't say suddenly, Graham. These have been on since, March, I believe it's been. And what's happened now with the decline of oil prices, which Russia's economy is really dependent on, and the sanctions, these two have compounded to really hurt their economy pretty bad. So the sanctions, again, that's why they put them on there, to give some problems, and now they're really starting to have effect because Russia can't depend on all the income from the oil they used to get.
Jacked up their interest rates. Is that to try and stave off inflation?
It is. And it's trying to stabilize the ruble, because when you raise interest rates, it should make it more attractive. But what I saw going from a 10.5% to 17%, to me, that sounded like a fear thing, like we better really boost this thing up high, which they did. I think it was an overkill thing. And it didn't help anyways, because people know the problem with Russia, again, is their income comes from oil.
Is this an isolated situation where it's just Russia, or do we need to start worrying in this country?
Not in this country. Our country, we got to realize here, we have a very diversified economy. We have, we do have oil and gas production, but we also have manufacturing. We have technology. We have the best legal system. We have transportation in this country. So our country is very strong in that regards. We're not just dependent on oil for the income that we get. So we have no concerns here, and that's why our economy is doing very well.
A lot of Americans, of course, argue that our economy should be back on the gold standard. I think that the Fed holds exactly zero gold. On the other hand, in Russia, their central bank holds, I think it's about 6% in gold, somewhere around there. Is there any argument to that, or are these kind of an apples and oranges kind of comparison of the economy?
I think it's apples and oranges because of the fact that, again, Russia, they have to have some stability because they don't have a good economy. Here in the United States, we don't need the gold standard because we have such a strong economy. That's why our interest rates are so low here, because people want to buy U.S. dollars, and they'll take a 2%, 2.2% 10-year rate because of the strength there. So we don't need to be on the gold standard. We have the gold standard of the economy that's very strong and very diversified.
Okay, and that brings in Janet Yellen. Of course, the Fed had their final meeting of 2014, and the message was kind of muddled to me anyway. How do you decipher it in terms of interest rates?
I think it's a big change because going from a zero interest rate environment to a rising interest rate environment, even though she said they'll be patient, that's a huge move, Graham. We've not had that in years, and now they're saying that, yes, we're now in an interest rate rising environment. I've heard economists say it could be like mid-year and so forth. I think based on the economic data, we could see something earlier by March or April where we start seeing some changes in interest rates. And she's based on the fact that, gosh, we're at a 6-year low for unemployment at 5.8%. Inflation and the global economy is not a concern for us right now. Oil prices, they can change all that. But we've got a good settled economy, and there's Fed hawks that say we need to raise interest rates now.
Well, so what's the ripple effect on that? I mean, obviously, home mortgages could and should be affected by an increase in the central bank's interest rate increase. What about some bubbles that may have developed on Wall Street and elsewhere. What about bonds? What's the effect of raising interest rates?
Oh, and probably the big bubble here, Graham, would be the bond market, because people, they're used to low interest rates. They're used to seeing their bonds stabilize and so forth. I've been doing this for a long time. Back in '87, March of '87, we had a bond bubble that burst, and people were surprised that they lost 10, 15%, maybe 20% of their bond funds. That's the big bubble out there, because when rates rise, bonds go down and people will be hurt. And I'm pretty confident where they're going to go to is some of that money will find its way to the stock market, which will help the market even more, because the stock market is not overpriced.
Okay, so but Yellen is hinting about raising interest rates. It's not because there's any sign of inflation, correct? The CPI is relatively low.
Right. CPI is relatively low. I mean, CPI just came in for November, down 0.3% year over year. Inflation's running about 1.3%. But we have to remember, Graham, oil prices and gas prices are declining, so that is causing that downcline. When that turns around, we'll see an increase. And I think they know this. This is a temporary thing on lower gas prices. When it changes and goes back up, we'll see some form of inflation. We don't want to, or Janet Yellen does not want to get out of hand and have a 5 or 6% inflation rate. Let's start raising rates a little bit now so we can stay around a 3, maybe 3.5% inflation rate, which is more comfortable.
Okay, I want to talk about a company now that is in many people's homes, but through computers. They're looking for, it's Netflix. They're looking for a way, the company is, to get into people's homes that's not necessarily through computers, but other ways, and they found a deal here?
They did with Dish Network, and it's a first deal in the U.S., and they're doing pretty good international, but they have a very hard time in the United States. So let me tell you, with Dish, they've got the access to 14 million homes. However, don't get too excited, because it's only going to be on their second generation Hopper box, and we're not sure how many Hopper boxes are out there. It could be 1 million only. So, but they made that inlay with Dish, which is a big positive for them. The reason why cable companies don't want to have Netflix in their boxes, that's going to take away from their video on demand. So Netflix might pay like $1 or something. They make far more than that on the video on demand. So cable companies are not going to be joining with Dish here, because it's a lost revenue for them, not a positive. So I think Netflix is in trouble, and we can see that in their stock price.
Yeah, it's been falling. All right, Brent, thank you.
You're welcome.
Coming up next, stop the tape, the economic recovery that isn't, plus the multi-million-dollar casualty in the Sony hack attack.
Take him out.
You want us to assassinate the leader of North Korea?
Yes.
What?